Good morning, everyone. Welcome to the Euro Trade. It is Monday. We are almost halfway through August. So we're going to see whether there are any opportunities. But before we begin, I am going to remind you of the risk disclaimer that Bruno has posted. So everything you see here is for information purposes only and educational purposes. Do not blindly copy trades, and any trading activities carry certain risks. So make sure you familiarize yourself with the risk disclosure. And then we can start. Now, since it is Monday, I'm going to take it slow. I also just tried to open Bookmap, and for some strange reason, it's not really reading one of the connections, so I'm going to have to mess around with that. If you're here for the first time and you just randomly stumbled onto this stream, I'm Marcus Stoker D, aka Deeyana Angelo. I've been trading for 18 years, and I specialize in commodities products, things like precious metals, energy markets, so products that are not generally that well represented, even though they're still very, very liquid. So with that in mind, let's have a look at some of these products. I'm looking at gold. It did hit my average daily range low area, and it seems to be having some sort of a reaction from there. If we go to a 15-minute chart, you will see that it hasn't quite yet hit that put support. Now, whenever it narrowly misses it, there is a pretty good chance that they go and test that first before they do anything else. So I'm not too keen to get involved immediately until at least we extend the initial balance. Now, the initial balance for London is always the same because you don't really have other products that open at super different times. So when London session begins, that is your initial balance, and this is where it is at the moment. One thing that I've noticed is before they extend the initial balance, this whole activity tends to be market maker territory. If you know anything about market makers, they don't have any particular directions in mind. They just want to provide liquidity and to make sure that they remain market neutral. And that means before the other time frame guys, the institutions that are looking for a particular direction, before they appear, everything is a little bit push-pull, tug-of-war. You know, there's no real commitment to any particular direction, so we need to be a little bit patient here. But yes, Paul H. is right. It does have some support around these areas. Is it a major support? Well, it kind of caused a nice big swing from ballpark this area, but I will still call this demand an offspring demand. I think that the main one was actually probably this one, and if we maybe go up to a 4-hour chart, that could become a little more obvious. As always, larger time frames can provide us some more context. So the low that we've been bouncing off of was established somewhere around 5th of August. So you can see this little spike here, and every time we tested it, we bounced away from it. So that's one thing to note for intraday trading. Now let's go up to the daily. On the daily chart, this just looks to me like it's beginning a swing down, actually. And from the daily chart, I think we have loads more space to the downside. The only caveat there is that it's August. How much trading are we going to see? So far, gold is moving pretty well for August, but again, some caution with longs, because in my eyes on the daily chart, this is just the beginning of a short. Let's have a look at the weekly whilst we're at it. Yeah, so similar story on the weekly chart. I would say that there's a lot of space. We're kind of in the middle of nowhere on the weekly. In fact, dead in the middle. So yeah, I'm gonna wait until I see what they want to do with this. And London can be a little slow for gold in and around this time of day. Typically, if we had DAX, that would be my choice of product, but we don't, so we have to maybe wait for a better time of day for this to happen. But yeah, be careful because 3410 has still not been touched. And usually whenever you have such a strong level, which is a put support where there's a lot of open interest, there is a very, very high probability that that's where they're going to go first before they do anything else. From the profile situation, we're obviously opening way below value, so we are way outside of value. That always opens up the possibility for a mean reversion trade, but just be careful of that put support because I think they're going to go there. The exhaustion of the daily range this early on can also be indicative of a single direction day. So that puts a little bit more wrench in the works. I would have preferred that we maybe exhausted the London session low or something, and then to actually exhaust the rest of the daily range later in the day. So yeah, some caution here with gold. It could be a single direction day that just carries on and on and on. But for now, it's still very much inside the initial balance with the possibility of a mean reversion gap fill up to the value area, which is much, much higher up, closer to sort of 3460s, 3475s. Those are some very important prices. We also have settlement from Friday, which is at 3458. So yeah, that could be a magnet as well. So all of the interesting levels are to the upside. So yeah, we'll see. Stelio says nice hair. Yes, thank you. All right, let's see who's in chat. Tom is saying so sleepy. 4:30 a.m. EST is rough. Yeah, man, I'm struggling here at 9:30. Never mind, my 4:30. So yeah, let's just kind of wake up, take it slow, have your coffees, you know, maybe do a bit of a walk or something. But yeah, so that's gold. Let's have a sniff around some other products. Natural gas has actually been pretty interesting recently. What am I doing here? Natural gas. That's the one. Let's start on a very large time frame, weekly chart. And I just managed to spill my drink all over myself, which is a great start. Weekly chart, we have some demands, just sub this three even number. Room all the way down to 2.5 actually. But yeah, since it's already fallen so far below, this kind of becomes a bit of a dangerous area to keep shorting into. Not that we won't find intraday trades, but just, you know, you have to be aware that if they do start to turn around, it could get quite violent, especially if we get any sort of adverse weather news or something. That tends to impact natural gas quite a bit. I am surprised that we're not seeing at least a little bit of a demand kicking up during the summertime, because usually there is some increase because everybody's using air conditioning. So that tends to naturally increase the crude oil, the natural gas demand, but that has not happened. So interesting. Has this summer not been that hot? I don't know. One very, very localized supply that was reactive on Friday and on Thursday as well was this drop-based drop area. So all of these levels are from last week, but you can see if I just remove this out of view that we had a drop-based drop area. So it dropped, then it based, then another drop, and then it kept being reactive. And now we're opening in the classic natural gas fashion with an enormous gap down for no apparent reason, unless I missed some news. But yeah. Bruno posting a dude drinking an absolutely humongous cup of coffee, which is quite funny. Funny meme. Yeah, that's what we all need on a Monday morning. Nat Gas, the Widowmaker, that's right. But I only look at it as the Widowmaker from the point of view if you're going to carry over swings. That gets very painful. Like, I don't really like doing any options trading on NG, precisely because of these gaps, right? So I prefer slightly less slightly less crazy opens after the weekend. You don't want the stress. You know, imagine if you were long against that, thinking that the 3-0 is going to be the stopping point here, and then it just opens quite a bit below it. Let's see how big this is. Just want to know. I want to know. Yeah, it's not the biggest gap. You know, I've seen natural gas have like 10% gaps. This is only 2.5%, but still not the best. So what do I see here? I mean, we're obviously in a downtrend, but there is a chance that it goes into that reflexive bounce because we're so low. That's always a chance. This gap, is it going to get filled? Well, it might. And if it does, I am looking to... I'm looking towards, back towards the 3 evens area. Now we had the settlement obviously just below that. We have the value area low from NYMEX trading at 2,986. So there's a whole bunch of stuff that is pretty important, that you know, the levels that are quite important higher up. So there is, again, that chance of mean reversions. But natural gas doesn't usually start moving until my 11 o'clock, 12 o'clock. So that, you know, we've got about, you know, 2 hours before that happens. So I wouldn't necessarily be looking for natural gas actively unless we had something on a 4-hour chart, which I couldn't really see anything decent. And plus the levels around here, what do we have? Yeah, we just have that put support, former put support from end of day trading at 3. And that could be either a stopping point or an accelerator. So, you know, right now it remains to be seen which one. Lower down we have GEX1. That's a pretty strong level. Some more put supports towards 290 when it comes to the 0 DTEs. And then the projected 1-day minimum is 288. Now for my average ranges, which are a little bit different, but still very, very similar measures, my ADR low exhaustion, so to the downside, is actually 280, not too far. And my ADR high, in case we go into that that gap fill, is just slightly above 3 evens. So yeah, those are your kind of pegged levels in intraday extremes. So you can either trade towards them or if the market shows you that that's what's happening. But once you get there, the likelihood is that there is no more massively good smooth moves because you are exhausting, you're exceeding the average daily range that this product does. And that kind of goes for everything that you're looking at. Major support is at 255, yes, but I think that's a little bit out of the scope of today's trading because that's maybe on the cards for this week. but I would be very, unless we have some tariff news or something, but I would be very, very surprised to see that today. I mean, stranger things have happened, right? But statistically speaking. All right, let's have a look at copper now, just to get a nice overview of all the things that we're looking at for this time of the year. So monthly chart, here's what I've been tracking. We do have, yet again, if you've been following me on here for any number of weeks, I know that I mentioned this behavior on copper to make an all-time high, then go into a jump, and then to spend all of the next month going into a short. Now, we've had a bit of a jump out of that that behavior, because what it did, it sort of made an all-time high, tried to run it up, failed, and then all in one go, I think this was that smash, the fat finger trade that we all think happened in copper. So now we have a situation where the all-time high and that reversal did not happen across 2 months. It all happened in one month. So what does that mean? Well, we have to look for some supplies. We have not really recovered very well from this smash down. We have some localized demands in and around this area. Just roughly where that observable range point of control from the volume profile is located. So it's not really telling me all that much, apart from we have a new supply, and new supply is, the edge of it is right here. I like to, make an edge and then use that as my orientation point. So can we test 478, 78.15? Yes, quite possibly. Is it going to happen today? Maybe not, but maybe in the next 2 weeks. I wouldn't be surprised to see that finally going through that weak structure that was left because of the fat finger trade. And then once we arrive at 478, I would actually like to see some more shorts there. Could this just keep falling because we have not recovered very well? Yes, that is also a possibility. But for my liking, for my risk appetite and risk allowance, I would want to see it at 478. Today we have some very bunched up levels. So we have put support, GEX3, GEX2, all in like a very, very tight sandwiched area. I do not like to see that, because that means even if you get the move, it becomes very difficult to get any sort of a profit margin. And think about the spacing of the open interest in options as the as your profile for the risk reward on the trade. So the closer they are, the less likely it is that you're going to get a smooth move through it. So because of that, you need to kind of take a step back, maybe look at more of a range bound condition inside that area if you can justify it on the day. But let's have a look at some lower time frames. Yeah, here's a daily chart. Here's that big smash down. And as you can see, there's a very sideways movement, no commitment to taking it anywhere really. So until that changes, it's going to be maybe a bit of a struggle to find some decent copper trades. And again, to remind everyone, it's August, so these things happen. But we still have a couple of products that are moving pretty well, natural gas being one of them. NQ so-and-so. Sometimes it moves, other days it seems to be super quiet, so August is a very, very funny time of the year. Joe wants to know, curious how you approach trades when gaps are left behind. Well, every time you have gaps, Joe, there's always a chance that a gap fill is going to happen. And, I have my own way of looking at it, which is combining that gap with the initial balance and where that's located, and then how we're approaching that auction. Are we extending the initial balance with that direction? In which case, you're probably going to see a continuation of the move rather than a gap fill. But if there is no commitment below, like they're not probing below that initial balance range, you will then usually get at least a chance to grab maybe a failed auction to the upside as a means of trying to fill the gap and then failing. So that's one option. For sure I'm not going to go into a breakout trade after a gap down and then doing the breakout trade of the initial balance lower. That's just, even if it works, it's a very painful trade on most days, because you will get some bottom pickers that will always bring the price back up. So to me, in that case, like for example, you're looking for, let's say that play that we talked about, like the takeout of the Asia lows and a reversal. If it's such a big gap down, I actually stay away from that, and I consider the takeout of the Asia low and reversal from the breakout of the initial balance range on a gap down day a low probability trade. So I would rather swipe it from the Asia high, if the Asia high is somewhere ballpark in an area of interest, and then run a failed auction or an auction fade if I want to go with the day's sentiment of the gap down. But if the sustained auction is successful to the upside, you will then see single prints. So you will see, what do the kids call it, fair value gaps and stuff. So you will see this big committed I just smacked myself with my pop filter there, so happy Monday. You will see a fairly good commitment to the sustained auction side upwards, and you will see no selling wicks, nothing to tell you that there are sellers there. So in that case, that gives us information. So, you will find that I'm not really somebody who likes to predict anything. I have an assumption of what could happen, but then anything from there onwards, I'm just reading what's actually already on the chart, right? And that usually prevents huge Muppet moments, because you have to stay objective. It's like reading a book. Like imagine reading a novel, and then with every single sentence you're trying to predict what the characters are going to say and what the writer is going to say without actually reading what the writer wanted you to read about. You wouldn't do that, right? So you wouldn't go, oh, and then they stepped up to the abyss. Oh, and then they jumped. Oh, then they jumped, didn't they? They jumped. And they moved away from the jump. Oh, damn it. You don't want to do that with the markets. And I think a lot of traders get themselves into trouble because they try to predict what's going to happen. And the reason why I like profile and the auction theory is because you don't have to do any of that. It actually shows you what's happening at this point with some very clear-cut orientation levels. I know that some people don't like it because they have this idea. Like, for example, some people think that any open below value is immediately discounted prices and we have to go against it. No, there's a little detail in there. How far away are we from value? Are we just opening slightly below value? In that case, that's very bearish. That's not, oh yeah, prices are at a discount, let's go in. No, they're not. We're still in a downtrend. But with the gaps, it means that yes, we've gone quite a bit far away, but even that has its limit. If it goes too far away, typically that depends on what you're trading, but let's say for some of my instruments like copper, crude oil, gold, if it's over 1% of distance at the open from the value area, over 1%, that's too big of a gap. That is not a gap. That's probably some kind of a repricing because some news. And then fishing for the gap fills is actually not the best choice, because, you're going to find yourself in a hangover day. If they do start to pull it back, it might not happen that day because of the news. But it may happen in the rest of the week, right? So all of that, like little contextual things that you can sort of string together, ask yourself 3 questions if you're looking at the gap fills in relation to value. Where did it open, inside or outside, and by how far? So those questions usually tell me what I should be doing, right? So if we are opening in and around vicinity of the value, typically 0.4 to 1%. Don't want it any further than that. I then look for mean reversions. If we open above that, so if we open, let's say, above 1% or below 1%, I go fishing for some news, first and foremost. And then I go, is this enough of a fundamental shift on the macro side for me to just say, well, this is just a continuation now? And if the answer is yes, I will look for failed auction shorts rather than fishing for gap fills long. And, that kind of prevents me from doing wishful thinking trades. But on any day, I always have 3 basic hypotheses. One is a trending day, which is usually further down in my hypos because it's lower probabilistically, because you don't get trending days every single day. I have a failed auction of some sort. I have a neutral day possibility. And I typically have, if it's a gap fill, then I will have a gap fill in there too. But that will be a part of a sustained auction. And I avoid doing things like, it's either going to fail the auction up or down. I'm not trying to flip a coin. I'm trying to exclude the probability of what should happen by waiting for a certain event, for example, initial balance extension, and then taking that information with all of the other stuff that I've got going on, usually 2 or 3 additional conditions that are fairly obvious in like an eyesore. And then you just decide. So, for example, if we extend the initial balance upside on gold, that pretty much minimizes the possibility of gold carrying on the crazy bleed to the downside with no prisoners. And even if it does create a double-sided extension of the initial balance, that changes my targets. So I no longer look for massive trades. We're now in a neutral day type situation, and you're only going to be looking for neutral day fades from basically put on your Dolby hat, but I like to use 30-minute time frames for this purpose. And then you're fishing for the middles of that rotation. You're not fishing for the full rotation each side. And then over the course of the day, you will notice which side is stronger that day. So maybe don't take the opposite side of the neutral day, but take the one that is strongest on the day. So let's say if every time somebody tries to buy it, a whole bunch of sellers come in. Well, maybe just look for neutral day fades from the top of the session high, liquidity grab, and then down to the middle. Can it rotate? Yeah. Is that a highest probability target? No, because the middle is on a range bound day. And usually if you have a range bound day, people struggle. I see a lot of people going long and short right in the middle of the range, and they're like, man, I can't catch anything today. And I'm like, yeah, because you're getting involved in the middle, which is probably the worst trade location that you could have ever thought about on a range bound day. So, stay away from it. Have some sort of like if we look at gold right now, let's just imagine that gold doesn't do much. We go into an August, super boring day, and gold just doesn't even move anywhere. So what would be, let's make this super massive. Here we go. So that's your initial balance, right? And let's say it tries to go lower, hits the put support, goes back in, rotates all the way back up, but then also fails to make any sort of massive traction up here. Above the initial balance high, which is 34.26.5. So now what? And yet I see people going, I'm going to go long from the middle. Yeah, sure, that might work sometimes, right? But for the most part, if you end up in a neutral range bound day, what's going to happen is that you're going to be flipping and flopping in and around this middle area from 34.16 to 34.22, where it's building structure. Like, look at this profile. It's building a very thick belly. Some people think that on an intraday time frame, that's good enough to get involved. It isn't. It's good enough on a massive time frame when you've run up a trend and you come against the POC on a daily time frame or 4-hour time frame, where some sort of a distribution happened or accumulation if it fell. That's why those time frames have a possibility of giving you an intraday swing, but it's working with different time frames that gives you that context. If you have a big belly in the middle of the day's range, intraday, that is an entirely different situation. Entirely different situation. And what most of you do is like, oh, it's going to go further up. And then you get stuck in like a trade that goes absolutely nowhere, or you get stuck in the middle of the range that goes against you. So it goes against you, you close it, then it goes back up, and then you enter into a long trade. So flipping and flopping, as I like to call it, like a fish out of water. So what happens, it takes out the session highs and comes back to the middle. So from your perceived movement and your P&L lens, and you've been terrified of range bound days, first of all, you haven't identified that it's a range. Second of all, your trade locations should be right the opposite side. So your trade locations on a range bound day, they should be up here, and they should be down here. Okay? Maybe this is a bit too big. So let's make it like this. And then your target should be where you're messing around with entries. Or if it's a range bound day, okay? Now, if it doesn't extend to both sides and you still have that potential for a gap fill, you really want to see not the liquidity grab and then a return into the initial balance range, which is this red box. You want to see a committed move into this big move down. You can call it fair value gap. You can call it a single print. You can call it whatever. It's a big candle that left this range that the market was in on. Okay? And then you're looking for a push through it with quite some confidence. And tape can help with that. Bookmap can help with that. But no, people are so obsessed with their P&L and they're like, man, nothing's going my way. It's like, you haven't identified the day type correctly. Of course it's not going to go your way. It's like, there is no other option. But yeah, so think about that when you're doing range bound days and you see the extension of the initial balance to both sides. It's a tricky one. It took me probably about 3 years to get anywhere near understanding what I was doing wrong, because I was always fishing for mean reversion. So I would be doing the same thing, right? I wouldn't take in the neutral day. I'm like, yeah, neutral, schmootral, whatever. I'm still going to try for gap fill. And then for 3 years, when I kept struggling, I'm like, hold on a minute. Hold up a minute. Yarden says, I'm struggling this morning on the mental sides. I've gone into 2 MGC long. Oh, this was from last week, was it? Or is this from today? No, it was from last week. Okay, so Yarden, let's have a look at what you were doing here. So your trade missed a couple of points on the take profit, and now I can't stop thinking about my P&L. Why did you let it? So if Yarden is in here, why let it get to a couple of ticks of your profit and not take profits? Were you asleep? Were you like, what was the reason for that? Because whenever it gets too close to my target, I actually have a 3-minute rule where if it doesn't hit the ultimate target in 3 minutes, I just take it off wherever it is. So once my trade gets to 75% in profit, I will drop down to a 1-minute chart and then wait. I give it 3 minutes to hit the ultimate target. If it doesn't, I'm out. Because at that point, you're chasing negative risk reward. You're chasing 2 ticks for the sake of risking, whatever your profit was. Let me see. 30 points. Yeah. So were you asleep? Did you not watch the trade? Did you not have an alert when it got too close to your TP? Like, again, you have to take responsibility for your own actions, right? If you slept through it, that's great, but you will have a lot of moments like that. And you just have to be okay with it. Yeah, you went to sleep. So you place some kind of an alert, man, to, TradingView has very easy ways to set alerts. And it just arrives as a ping to your phone so that you can actually wake up and go, oh, okay. You know, it's all very well expecting the trades to just go for a million ticks, but what time do you sleep until? Do you sleep through the London Open? Do you sleep through Eurex Open? Do you sleep through Tokyo Close? Because Tokyo Close in the last hour typically has a huge reversal from whatever they were doing. So, you know, you can't really go, oh, no, I'm thinking about my P&L. No, you need to think about your process that led you to not take profits because you weren't watching the trade, and that needs to be adjusted. It's like, there's no real, I don't subscribe to this whole, oh, poor me, poor me, I missed the trade and now I'm thinking about my P&L. No, take responsibility, man. Take responsibility for your actions or inactions that lead to less than desirable results, and then aim to change those. There's no other way. You know, thinking about your P&L, great. Keep thinking about it, but also keep thinking about the fact that you made no effort to put an alert, to, you know, wake up at the time when you know that there are huge statistical probabilities of the market doing the take profit move. Like I said, Tokyo, last hour, Eurex and London Open. You know, we need to take responsibilities, you know. Mash NYC says, I don't look at P&L, I look at consistency. 20 trading days last month, 3 bad days out of 20 days traded every day. Consistency is key to this. I 100% agree with that statement. Yeah. Paul H, here we go. Paul has another way of doing it. When I'm over 80% of the target, I've moved my stop to 80% line, and if it's within 5 ticks, I just close it. Yeah. Exactly. Yarden says, I wake up before London Open. Well, if you're running an overnight Tokyo trade, you really need to wake up for the 6 a.m. My time. So that's the last hour of Tokyo. That's just how it is. I wouldn't say it's stupid, wake up AI. It's not stupid because many people trade like that because they have jobs, they have families, they have other commitments, and trading is, you know, quite possibly not their majority of their income. But with that, they also behave like that, you know. Oh, it's not that important, who cares, right? But if you ever want to make this into any kind of an income that matters, even if it's a side income, it can bring you windfalls, right? And with that comes responsibility and comes good trading practices. We can never get away from that. Joe says, don't be a dick for a tick. I would agree with that, but when you're asleep, you're not being anything. You're just asleep. So you have no control. This is why, you know, like, look, if I'm running an Asia trade, I'm getting up, and this is the reason why I don't do it very often, because I like my sleep, but I need my sleep at this point. I need 8-9 hours to actually feel okay, because I have very long days that I work. Anyways, I need naps in between the sessions and, you know, a whole bunch of other things. But if I'm in an Asia trade, I'm always putting my alarm clock for the last hour of Tokyo to watch it. And then I watch it from my phone quite frequently. You know, I have one of these big Z Fold monsters, and, you know, I can see what's going on. So if I'm in an Asia trade, I will always wake up early to watch what happens. And then if I don't get a massive reversal, I can then carry it through. But even so, if I'm awake, I'm awake. I ain't going back to sleep. For the most part, unless we have like FOMC or something that caused a huge outlier day to happen. I mean, you know, screaming to the downside or upside, usually downside. I love the days when FOMC goes smashing everything in its sight, jumping off a cliff. I usually find a very good Nikkei trade long in that case. And, you know, I have to sit through it, you know, so I would usually stay awake through the Tokyo Open, which is midnight London time, was what I was trying to say. And then I will usually stay awake until 2, 3 a.m. just to make sure it doesn't go back on me. And then I sleep for a couple of hours, and then it's time to wake up again. You know, people go to parties. I stay up to trade NQ a couple times a year. That's all I'm raving. Yeah. My rave is trading Nikkei overnight. Paul Smith with the one-liner. Short gold and NQ. Now, Paul, if you've been here for a while, Paul Smith, you know I don't like sort of single sentence statements. Why? Explain it to us, because I don't think so. I think we have put support, which is a very, very important level. And it's not the put support just from the 0 DTEs. It's the put support from bigger options. We have... We have 1, 2, 3, 4, 5, 6, 7, 8, 9. We have, let's say, a week and a half before the next option expiry. And those levels become very, very important. Joseph says, it does get annoying when move I wanted to complete in your session gets left for Asia. Yeah, tell me about it. I frequently run trades on my own account that actually get the profit in that hour when Topstep closes our positions, right? And this is why I would like to see them extend that. Because the amount of times I ran an NG trade or a copper trade, so natural gas and copper like to do this, where they sort of go through the settlement and then everything seems super quiet. And then in the last sort of 30 minutes of the New York session, suddenly there's a reversal. And usually on copper, because it's such a thin market, it almost looks like it just teleports there. And then it stays there through the close. And then in the last half hour of actual electronic trading, it just pushes even further. And then I sometimes leave that for Asia. But by the time that Asia starts trading, usually I'm very close to my 2R multiples target, which is something I do as a default. So yeah. Francesco says, what is the best way to take partial profit on the platform? Well, if you use the dome and you're in multiple contracts, you are probably just better off to do a market order on a partial. So let's say you're in with 3 contracts and then you want to exit 1. So you just click on 1 and you click the opposite side of your order and that'll take you out. Another way, if you are working off a preset take profit limits at certain areas, like let's say I use GEX levels, and you go, well, there's a minor GEX level here, it might work out, it might not work out, so let's just take it here. You can do a limit order. But it's really down to the preference of the trader. So you need to find a way that you resonate with the most. I like market orders because I like having a bit more control over my trades, and I also like to watch real-time action, especially if we're find ourselves in a trending day, and then let's say I'm shooting for 4 or 5 R multiples, but we get to 2.5 R, and then we're at a precarious time of day when I know that there's probabilistic events happening that might derail the profits, and then I see it turn around, start to dip slightly below 2R. At that point, I will be like, I'm taking a good portion of this out, and I'm only leaving a little bit. All right, so gold tried to go lower, but some buyers have appeared again. Initial balance still intact. In fact, I don't know whether any of them extended the initial balance yet. Looking at platinum, nothing there. I'm going to have a look at YM, because YM can sometimes move. No, YM still inside the initial balance. Of course, DAX extended the move. Okay, so I mean, look at this. So this is why I trade DAX normally. So everything else pretty quiet, range bound. DAX 226 on the day. Already did a mean reversion gap fill. Let's clean this up a bit. So this was a POC area that I was looking at. And now kind of just bleeding through the initial balance and trying to return into it. But we've had the value acceptance that just got run over completely. Average range is still there, but I would like to see this pull back to about 250, 280. So this is DAX. So somewhere back to this area. And then maybe some more shorts, because this is an interesting development here from the daily chart. Distribution. Are we going to have liquidation? Very likely. So yeah. Smashed through the low that we've been bouncing off of for quite a while. Now testing that. If they cannot climb above that, it could be a sustained auction situation. But for now, it's just building structure around the initial bounce low. So I'm not really interested in it right now. And I'm certainly not interested in going against this because it's such a strong move. It's a value acceptance that got completed in one fell swoop. And yeah, until it shows me what it wants to do, I'm going to wait. Then if it's a momentum trade, it really doesn't matter where you enter, because the momentum just takes it off, or takes it over, and accounts for the poor choice of a trade location. But yeah. Yeah, Joseph says, same reason I run own cash account to capture what I can't in futures. Yeah, I have 3 different accounts. One is a corporate. Another one is my kind of personal, I call it the YOLO account, but my YOLO version is not the same as somebody else's YOLO. Because for me, it's like, oh yeah, you trade like 2 or 3 lots on a 160K balance. And then I have an options account as well. So yeah, so Joe, I don't really trade that early because my brain, frankly, does not work that early. And NQ can follow whatever DAX is doing, but on some days they're completely not doing anything really. To me, DAX looks stronger. Sorry, weaker. Why? Because this is NQ. You know, if you compare that to DAX in the same time frame, because we don't have DAX, so this is why I'm showing my other platform. And yes, I have it as white. Call me a psycho, I don't care. But look, this one, all-time highs, very close. This one, skewed to the downside, right? So almost like a bull flag, sorry, bear flag here. And yet, NQ to me just looks like it wants all-time high. So, same setup or not, on the daily chart, they both look very, very different to me. And for DAX, I prefer to trade in and around this period and all the way up to my 1 p.m. That's about an hour and a half before New York Stock Exchange starts. And then I will typically have a break and not trade anything until it's after 3 p.m., closer to Euro close. And some days I actually wait until the final NYMEX, 90 minutes before settlement, and that would be the only time of day that I trade, because that I wasn't and still am an energies trader, right? Metals I started trading because energies don't move for the Euro trade, and we didn't get DAX, so I didn't have any of my usual products. And then it was actually a good thing for me, because it made me realize how copper and platinum are moving for this time of day, which I didn't really pay much attention to. So so for me, this is kind of almost like a new thing to watch precious metals for London. I never gave them the time of day. Ever. So yeah, challenge yourself, you know? Challenge yourself. Learn new stuff. Right. What else do we have? Can we have a look at what's interesting? Maybe we can have a look at CL and RBOB because they are very connected. Actually, let's put CL on this side. Yeah, I don't think I'm gonna necessarily trade this early on. And just for, I'm doing it again, trying to change the products by changing time frame, which is never gonna work. All right, you can see that. Right, crude oil reached some interesting levels on the weekly. Now, full disclosure, I did kick off a long call option from the 62.50. So it was a little bit more expensive because it was already technically in in the money. But I do think we have a very good chance of rotating back up. So I'm going to show you why. On the weekly chart, we have this localized area that we've been in since June. So that is your distribution curve for the summertime. Every time we reach these sort of edges on the weekly chart for the perceived weekly time frame, you will notice a certain pattern that tends to happen. So here we establish and this was March, we established a low, we established a high, and then for quite a while, it was like, oh, we reached the lows, let me go up. Oh, we reached the highs, let me go down. And only after that was happening, we managed to break through it. Let's have a look at the monthly for that bird's eye view. Monthly chart, this is all still very range bound, right? So we had the COVID run up from the lockdowns and stuff, recovered from there. Since then, it's just settled in a range. So I pointed out this supply. Did run again, I told you about everything that I was doing. So I did run a little end of month long puts because I like long options if you can time the that initial run up to be pretty early on in the options, and I never hold them to expiry on the long side because it erodes the profits too much. So that's not the point. I don't want them exercised. I'm not looking for a delivery of crude oil of any kind. So I'm just looking for because obviously I'm an intraday trader as well, so I can time it pretty well with my intraday tools to figure out when we're gonna have the highest probability of the market going into its biggest move, and that will be the day that I would typically enter my options trades. And then I just wait for like 1 or 2 days. If it doesn't happen, I will usually just take it wherever it is. But if it does happen, that actually means that you can have a trade with a clearly defined risk, which to me at this point in my life is more important than anything. Like this futures trading is all very well, but I'm just getting more and more, like the older I get, the less I'm comfortable with the extraordinary amount of risk, if that makes sense. And with the long options, the risk is predefined. It's like, what your loss is going to be. And I like that. Whereas in futures, you never quite know because there can be slippage. It might not fill you, especially if you get to start trading with slightly bigger sizes. All of those extra problems that you never even thought about. You never even thought about not being able to get a fill on your take profit on a, 60, 70, 80 lot trade. And yet, whole new can of worms starts to come up. So it is stressful, but to me, long options are actually a beautiful way to express your sort of swing type position with a very, very well defined risk, and that makes me feel a little warm and fuzzy. So yeah. But yeah, let's have a look at RBOB as well because they are super connected. One is a raw material, the other one is a derivative. So same thing. You will see that they're not too dissimilar. So they do still have a range. And they're almost twinsies, right? Like if you didn't know this was our Bob or Robert, you would think this is the same chart. So well, surely, and there are differences, but they are super connected. Now on an intraday time frame, one of them will always be stronger than the other, and one of them, this one, is a much more liquid product. For every 100 ticks that crude oil does, our Bob typically does 300 or 400. So it's kind of like an NQ of the energies markets. Right now, they're pretty correlated. I don't see any one of them being weaker than the other. But out of all of the products that I've been looking at, crude oil is actually breaking out to the upside. Whether that's going to stay in for the entirety of the day remains to be seen at post-NY cut, which is after 9 a.m. Central. (9 a.m. Central being a very dangerous time of day for reversals, because crude oil is a short bias product, like equities are long biased. This one is short biased. And while I hate being long crude oil intraday, I will sometimes pop in the long option because I feel that's a lot less risky. And also, if we get a tape bomb to either side, I'm still protected. So again, different sort of way of looking at the market, but it's mainly swing trading. You know, it's not just like, oh yeah, let's just do an intraday trade for a couple of hours and call it a day. The options that I do usually last between 2 and 5 days. So I just want to make that clear. And whilst I dislike crude oil intraday these days, and I would much rather just trade our Bob, there are still opportunities there, you know, especially if you're not chasing, you know, 70, 100, 120 ticks. Because if you look at what crude oil has been doing, it has been sort of expanding the range. But then you look at it even on a 4-hour chart, it's still a little bit painful, right? You get one good day where it kind of goes down, and then tug of war, ending up with drop-based drop. One decent day, but even though this is still very wicky. And then again, and these days where it's like not doing much, it's actually only moving like 100 ticks, which is very low for crude oil, like historically. Crude oil that I know and love and that I've built my career on for 12 years was moving like 300 to 400 ticks. That's $3 to $4 per day. All right, so what are we looking at on the daily? If we go above 63.86 and we hold above it without any meaningful selling wicks into the post-NY cut, that could mean that reversal on the daily chart is in force, and we could see it push all the way back up through the POC all the way back up towards the 70 level where we started this run down. On the daily chart, this swing down very clean. Some overlap between the candles, but generally very clean. There's none of this mess. So this is an unclean chart for me. It needs a shower. It needs a good scrub. But this one, very clean. Whoosh for a few days. And now it's left a very nice trail that doesn't have any congestion zones in the way. So that's why when I saw that, I was like, if this turns around, that looks tasty. Looks very tasty. I shall go yum. So yeah. Ariel says, Deeyana, I love your hair. Thank you so much. I was a bit bored and we were starting the season 3 and I figured it's time to mess around with the hair a little bit. But mostly I'm just gray these days. So, you know, I've actually been toying with the idea to go to one of those, not that I leave the house much, but I kind of wanted to see, because I'm very gray. Like you can probably even see it, like you can see it here. I'm salt and pepper, right? Very salt and pepper right now. Not surprising, you know, I'll be 45 in December, but I wanted to see whether maybe I stop dyeing my hair in like this and just go salt and pepper and just kind of basically be gray. Because I still have a relatively young looking face, so I think I could get away with it without looking like an old hag. But I don't know, I might just absolutely hate it, and then I'm going to waste a lot of cash, and then I'll be like, oh, I hate it. And then I'm going to ruin my hair. And still want to re-dye it back to what it was, so yeah. Boy, these sound effects make me laugh. Thank you. Joseph says it is satisfying to find the right instrument to express a trade idea perfectly. Yeah, it's very satisfying, definitely. But I think most people have problems with the other part of that equation when you think it's a perfect setup, but it doesn't quite work out. And that causes emotional dysregulation. It causes stress. Why? Because everybody wants to win, right? But unfortunately, until you get to a point where you're perfectly okay with your losses, there's a lot of processes to put in place. Because to me, I don't really care much at this point about how much cash am I going to get out of this. It's all the same setup, right? It's like, it's either going to work or it won't. That's it, right? And even when I have like trades that I decide to take off early and they only make me a few ticks, some people will be like, oh, that's a scratch trade. It's a win. To me, it's actually a loss. That's how I look at that. Because I'm like, that didn't do what it was supposed to do. So that's not doing anything for my P&L. It's not even a buffer trade. It's not even 1 hour. So why should I even care about it? So this is where if my trade does not reach at least 1.3 up to 2R, that's like the target where I deem the trade attempt successful. Anything else than that, you take it off a scratch, it doesn't even get to 1 hour, or it gets to 1 hour, then it comes back on you and you take it for break even, or you take it for a few ticks. To me, that is a losing trade, mate, because that didn't do what it was supposed to do. And you were out of it anyways, right? So from that perspective, in my head, when I have a scratch trade, it's a losing trade. It's exactly the same to me. I don't care about the P&L. That trade didn't do what I wanted it to. And then the question is why? Did I mistime it? Did I enter too early? Did I enter too late? Did I enter the right time of day? And if the answer of all of that is yes, yes, and yes, then the process needs tightening up again. It's nothing to do with, oh, boo-hoo, I lost a trade, or it was a scratch, or let's pat ourselves on the back for making 5 ticks a trade. You're never going to make money like that. It's like, you have to have the runners that will keep the numbers on your side for the times when you're in drawdowns. So overall, when you look at your P&L curve over like 1 year, 2 years, 3 years, what were the trades that kept your account afloat? And I bet you it's not going to be the scalps. It's going to be the days that gave you the biggest profit buffer are usually the days when you caught a runner. So think about that for a moment for all of you grasshoppers out there. Boing, boing, boing. And I mean that in the kindest way possible. I want everybody to do well. You know, I have everything I want in life. I have a beautiful house. I have 8 dogs. I have a husband that I adore and love. I have the life that I want. But if you're not there yet, then you have to really set some processes in place. Like, for example, not worrying about doing too many trades, but worrying whether the process behind the trades that you're taking is solid. Do you feel confident entering a trade, or are you always trading with like butterflies in your stomach because you're so afraid of everything? And you're like, oh my God. Can you relax in a trade when you find a setup that you've seen? Or can you define your, like, let's take it to the basics, you know, take it to the bridge, take it past the bridge, take it to the post office. If you go down to the very basics, can you define your playbook to me? Like in like a couple of conditions, 2 or 3 conditions? Can you do that? Can you put it in a flow diagram? Like condition 1, condition 2, entry, timing, strike. If not, try to work on your process. What does the entry look like for you? It doesn't have to be like, oh, I always want to see a bullish engulfing on a 2-minute chart. No, it doesn't have to be like that. But it could be, I'm looking for bookmap to show me, orders below that get taken out, and then shaving off of the delta, maybe by half, if there is any delta there. Delta being neutral, that could be a condition. Or is it just like, oh, well, it reached VWAP, I'm going to go long. Because that's not good enough. It's not like I'm telling you after 18 years. You will get to a point where you're malfunctioning. And if you don't have well-defined playbooks, you will lose yourself. You will lose yourself. As soon as you start the doubt creeping into your head, it's like that little gremlin is like sort of just crawling on your shoulder and goes, you suck. And then you're like, oh my God, did I do this way this time around? Or what about that other time when I had a lot of profits? What was I doing then? Oh, it was Trump tariffs, so that's not normal. I can't rely on that anymore. But what were the actual setups I was taking? Well, I don't know. I was taking breakouts of VWAP. It's like, you have to predefine your setups, and you have to explain it to yourself first and foremost, and make them crystal clear in your head. Go back and look at your good trades. What happened at the time? That's how you do back testing manually, right? You lived through the trade, and now we're going to go and review it and define it. And then go back in time to see how many times you did a similar trade. And eventually patterns arise. Like magic, right? It's like Yoda, or Grogu. Got Grogu in my window over there. So yeah, use the force. Use the force. But yeah, use flow diagrams. Define your playbooks. And then try to do them at the same time of day. Try to do them, because there's a pattern to these setups. They will usually occur. Like MOC, end of the day. Extreme version of the time of day doing a particular thing. And what do we have around it? Usually we have negative delta. So again, that's condition 2. And then what tends to happen? Delta gets shaven off, MOC strikes, they roll it over completely, and they start going back the other way. What's that? Oh, it's a short squeeze. What time of day does it happen? 10 minutes before the close. So those are your conditions. Time of day, condition for entry, look for price action evidence, strike. That's your trade. And if you can't do that with every single model that you're trying to trade, I promise you will struggle. You will always be wondering, how did you do that trade? Because you're like, what did that look like? I don't know. So define that. I probably have about 5 core playbooks that I rely on, and I have probably about, let's say, 2 or 3 variations on some of them, because not every playbook is always going to be the same. So for example, you can have a sustained auction long that does extend past the initial balance, but it's not a super strong extension, so then it kind of weaves back into the initial balance, making it look like a failed auction, but then it hits VWAP or some kind of a demand that we created earlier, and then it jumps. What do I call that? It's still a sustained auction, but I actually call that setup strength inside initial balance. And then I don't expect it to go to new highs like I do with sustained auctions. It modifies my target expectations to the high of day. So that is the difference. And sure, it can continue into a sustained auction, but to me, it's a slightly different playbook, the way I see the market. So yeah. Zach Lazarus says 8 dogs. Cruella DeVille was a day trader. Yeah, but I don't make coats from them. I just enjoy dogs. So me. Yeah. I'm not really seeing anything livening up here. I'm looking at all the products we have available to trade for this time of day, but it is a quiet start, apart from DAX, obviously. Crude oil, the reason why I don't like it from an intraday perspective is because it's building structure. So let me just show you what I mean. So we had, just checking to see whether I am covering it with my face or not. It's probably, is it here? No. And maybe you can hear the dogs, but I do have a noise suppressor, so maybe not. All right, so this was 8 o'clock, 8:30. Here we go. This was the initial balance. So usually when you have a really strong, decisive move, the first extension is not a selling wick, but instead it looks like this next candle. So right now what this means is that we've built some structure, and therefore that weakens the strength of the auction. The auction is up, but it's not the strongest. It's a medium strength auction for now. Can it keep going? Yes. Is it likely that we might get a huge turnaround after 9 a.m. Central? Absolutely. So I really want to see them do the same thing into like post, like the most ideal situation here for crude oil. It would be we try and run it up, and then during the initial balance, we actually sell off for NYMEX. So we start the regular trading hours. This is the London initial balance, but NYMEX is the main session. And then we sell off for the NYMEX initial balance. Maybe fill the auction to the long side, and then continue into some kind of a asymmetrical neutral day. Another choice would be that the initial balance does sell it off, but then post NY cut pushes it into a clean, sustained auction, and it just carries on into a trending day. But it's August. I don't know whether we have enough volume to do that without a catalyst. So I'm going to be very careful with my intraday setups. And maybe, just maybe, I'm going to wait until the last 90 minutes of NYMEX and then kind of see whether there's anything there. But I'm sure not going to be smashing trades halfway through August, when most things are looking a little bit quietish today. So until that changes, until it livens up, I'm just going to hold my horses, and I'm going to wait for the best setup possible at the highest probability day trading time zone, if that makes sense. All right, so Mohammed Trade says, think, do institutions, banks, hedge funds do day trading? No. Then why Topstep? Actually, that's not strictly true. Then I'll explain that. They're a scam. It's a scam. Okay. Have you heard of HFTs? High frequency trading algorithms. Who do you think runs those? Considering that the service for, and the computing power for that goes into like millions of dollars just for maintenance. Do you think your mate Dave down the road runs the HFTs? No. But what are HFTs? They're market-making algorithms. That's what they are. So banks do day trade, but they don't do it manually. The way to do intraday trading consistently over long periods of time is not to do what the HFTs or try to emulate what the market-making algorithms are doing, because you will never be able to compete with that. And if that's what you think intraday trading is, smashing 300 trades manually like it's 1980s, you need to re-examine your life choices, because the most active traders are the ones that are frequently cited as 90% of traders lose money. If you become a selective intraday trader, selective intraday trader, where you don't smash in 100 trades per day. And you define, like I was just saying, defining your playbooks correctly, being patient, employing process over anything else. Those kind of people make money. And if you think this is not possible, maybe it's not possible for you because you're still in the scalper, hyper scalper mode, and you think that you need to take every single move, and you're lost in your own sort of emotional dysregulation. But that has nothing to do with Topstep, okay, and everything to do with you. So please be respectful when you're talking about firms that have enabled everyone to get into the prop trading community and industry for the lowest entry fee ever in the history of prop trading. And in case you don't know how it used to be, maybe you want to have a look at my channel where it's underneath this video. Topstep have kindly put my YouTube channel there. And I have a video there where I compare how it used to be in prop firms and what the actual cost of prop firms entry prices were. And it was anywhere from $4,000 up to $25,000. And you had two models. You had the apprenticeship model and you had the collateral model for the more advanced traders. Apprenticeship, you would basically pay to get in there to like anywhere from $9,000 to $25,000. That was the apprenticeship fee. The fee. But they would teach you. You had to like do classes and you had to like sit there and, learn about new stuff. And, it was useful. But on the other side, you had the collateral model where you go in and you give them $10,000 and they provide leverage in the risk systems. But if you lose those $10,000, you're booted out. None of this try and try again or reset. Reset. There's no effing reset back in the day. It was like you mess up the initial capital, you're out, my friend. And if you're calling Topstep, names, just know that they were the pioneers to bring prop trading to everybody, okay? You're not being fair. It's not fair. Because of Topstep, many people's lives have been changed for the better. They have more resources. They're not trading their personal brokerage accounts where they're blowing up 10, 20, 40, 50, 100, 200K. I had people coming to me saying that they've messed up $600,000 of their own personal capital and then realize it's not the way and they don't know what they're doing. And then they started their learning process for a much lower fee. And they tell me, I wish I knew about prop firms before, because then I would be $600,000 richer, right? So keep that in mind. The amount of capital it would require you to do all the same mistakes. You wouldn't be less Muppet in your personal brokerage account. In fact, I would argue you'd be more Muppet because it's your money and more emotions. Even more emotions go along with it, and it's real money. And for most of you, some people don't have that much cash. And, somebody saying, well, I invested $10,000 in my own personal brokerage account and I lost it all. It takes them like 2, 3, 4 years to get the 10K. Now, we have the disclaimers to say don't trade with money you cannot afford to lose, because, if you look at it in the way that if you're losing your savings, well, that's very expensive. And that's the money that you really cannot afford to lose. It's not just some like disposable income that you don't care about. It's your rainy days moment, right? So if something happens, you want to save a nice cushion, a lot more than 10K. But for most people, 10K is a lot of money, especially if you come from, third world countries or something. It's a hell of a lot of money. And people lose that in the personal brokerages. Topstep and the firms like Topstep, they take away that risk. If you don't see that as a value, huge value, and if you don't think you're super lucky to be living at the time when this is even an option, I kind of feel bad for you for not seeing the opportunity that this is. But each to their own, man. I'm not here to twist anyone's rubber arm. So yeah. Captain Knuckles, yes, we had options, but you had to earn your way to the options. You couldn't just play options because they're very expensive. And typically you would, you can't really trade options with 10 grand. Like, come on. Like what? You're going to do 5 options and then blow out. So to trade options, you would need to get into the space, then prove that you know what you're doing, and then eventually they would offer you and you had to even be able to prove that you can trade before you can trade overnight. That was also a thing. So you couldn't just come in and say, oh, I'm a swing trader. They'll be like, yeah, great. Why don't you just prove to us that you won't lose all of our money like tomorrow? And then they would be like, okay, well, you've managed to stay afloat for 3 months. Yeah, okay, you can do swings, but the swings, because of the overnight margins, have to be a third of the position that you would normally do intraday. Because that's another reason why firms don't allow intraday trading, don't allow swing trading, because the overnight margins are ludicrously expensive, especially if you're trading some of the products that are not your NQs and ESs, right? So that's another reason. So you would have to really prove yourself before they would unleash the purse strings and give you more leeway. And in many ways, that's how prop firms work today as well. Even though everybody's like behind the screen and stuff, but they know you, they see the names. Don't be fooled by thinking that they don't know who's the gamblers, who's the full porters. They're looking. That's why they have a risk team. So yeah. Jason VR says, I think people should understand that a prop firm is making a market. Kind of. What, you think sim firms are making a market? They're not making anything, man. But yeah, the live accounts are. Yes, we are speculators. This is one of the big things that we're trying to kind of regulate in the space and to bring to the actual industry, is that everybody who's trading intraday, to a degree, is a market maker, but not in the way that, oh yeah, you have an investor and then you have to be taking the opposite position and then being market neutral. Speculators are speculators. They are definitely contributing to the pool of liquidity, but the ones that are doing the heavy lifting is usually the institutional market makers, because a single speculator can't do squat, right? We don't have enough volume intraday to be doing that. So, when you're in a market making firm, you're actually given a quota to fill per day, like 3,000 contracts, 5,000 contracts. And you have to do that however you can and still to try and make some money. I hated it. I really didn't like that because I'm more of a swing trader, and even on intraday, yes, I can scalp, but it's only if it's a range bound day. I have no other option to look for mean reversions and to look for some of the bigger chunks of the trend for the day. So I didn't like that. But yes, you're absolutely right that speculators are definitely contributing to the market making activities, because every transaction increases the liquidity in the marketplace. That's the point. However, institutional market makers have a slightly different thing. They have to fill a certain number of orders per day, of units per day. And market making these days is largely automated. You're not going to get, a singular guy sitting there for 12 hours just clicking buttons. They've all automated their market making activities. Make no doubt about that. Mohammed trades, that's right, to some extent, but please answer why Topstep only allow day trading. So were you sitting on your ears there, mate? I said overnight margins are extortionately expensive. So therefore, if they're allowed swing trading, they would have to have a lot more capital to absorb the overnight margin. So am I speaking like, I don't know, Martian here? And it's not Topstep's fault or any other prop firm's fault that people are muppets. Like, I'm sorry, but like 90% of traders, what do? You trade whilst you're tired. You trade when you're emotionally dysregulated. You trade out of fear, out of doubt. You lose one trade. What do? You enter another trade. Is that a process? It is not a process. And then people blame the firms. People blamed banks for the same thing. It's like, oh, banks are the ones who are making money. Yeah. Because because education and guess what? Stats models, they work. But, you know, I mention statistics to any newer retail trader and they glaze over. It's like, you want to make money? You have to look at stats, man. Like, what? But no, they just glaze over. They just glaze over. It's like, and here I mentioned overnight margins are prohibitively expensive and they require a big, oh, but why does Topstep doesn't? Like, I swear, like, I'm just like talking to a wall here. Like, I hope it's not like that for everybody, but yeah, I say one thing and then people just come back to you with exactly the same argument that you've just explained why swing trading is not allowed. So I don't know. Let's just finish it here before I get annoyed. So yeah. So I've just explained it. Why? Let's finish it up with Joey. Says, how can I get level 2 Dome? Joey, level 2 is an additional service. So you have to go into your billing settings. And there is a section there where it says buy level 2 data. Without that, you will not be able to get the full Dome. So you would just get probably what I have on ES somewhere. Now it's a combined here, so I have everything. But generally, when you don't have level 2, you will just have one price on each side, and that'll be it. So if you buy level 2 data, which is $39 per month, if you're in a European country, there might be some VAT attached to it. So yeah, but you have to get it as an additional add-on service. So consider whether that's useful for you or not, because it's not always necessary. You know, if you're not a Dome trader, is it if you're just looking at patterns. But if you're trying to learn, then yeah, you can't do it without level 2. Carmen Rojas says, oh my God, I love Topstep, but coach is always on. I'm a night owl and found forex trading and futures. Excellent. Welcome, Carmen. I used to be a night owl. I don't know what happened, but I ain't a night owl no more. Ooh. Ooh. Pi says, by the way, D1 is the best time to trade RBOB and NY or overnight? NY 100% for RBOB. Like overnight, most of the time it's a dead market. Crude oil can move sometimes if there's like headline risk and something. But I mean, you might be able to get much smaller moves, but really, this is what it looks like out of hours. This is an Asia market. So to me, RBOB is only for NYMEX, regular trading hours for that particular product. It kind of starts to pick up speed in and around this time of day. But I would, I usually fade these moves if I'm going to do RBOB. But I would just tell you, statistically, I don't really have good playbooks on RBOB for this time of day. Okay, I have them for post NY cut after 9 a.m. Central into the Euro close, and then after that, the last 90 minutes of NYMEX into NYMEX settlement. Those are the prime time sort of day trading time zones that I use. Captain Caracos, have you tried crypto futures in the past to avoid intraday margins? No, because I don't trade crypto. I'm not interested in crypto. I'm Granny D over here. I don't think that crypto is very safe still, even though it is futures. I think it's heavily manipulated. I don't want to trade manipulated products. I still think that certain crypto futures do not have enough market makers in them, and they're still guided by whales, crypto whales. All of that makes me extraordinarily uncomfortable to put any money into crypto. So here's where you can see I'm a Gen X person. I did trade Bitcoin in 2017. I thought I did a great trade. Held it for 3 years, both that and XRP. And then I took it off thinking I did a great trade from 4,000 to 20,000 in prices. And then it exploded. And, you know, it is what it is. All right, 410 reached on gold. Hey, let's just finish the stream with that. See what I mean? I did say they're likely to go and touch 410 before they do anything else, and there it is. So whoever was fishing for the reversals here, they probably ain't fishing anymore because they're not around. But yeah, now whether it fails the auction or not, here's what you might want to watch out for. It has to hold above 410. and it has to reclaim this ADR low. It cannot have a selling wick into the next 30-minute time frame close, because that would mean more sellers are around. If you see that, then there might be some longs in the means of the failed auction. Failed auction usually has a profit target to the opposite side of the initial balance. So it will be 34.26. But I sometimes like to look at the options chain and go, do I actually have anything there? So I have a minor GEX level at 34.20, but because the initial balance is actually higher up, if they do go all the way up, I can see this going to 34.40 pretty easily. So actually an extended target based on the options chain would make sense there. If they don't manage to reclaim this and they smash back down below the ADR low, which was, by the way, 34.13, I would expect the put support to break down, and then I would expect to see that single direction day. In that case, you want the whole structure to be underneath the initial balance as well, and underneath put support. So that's your little zone of about 14, 15 points, where you want to make sure that you're not getting involved in silly trades before you know exactly what they want to do. So keep an eye on that. Two hypos, either a single direction day because of the early exhaustion of the ADR low, or it's going to be a failed auction, maybe a neutral day, and this is all before COMEX kicks off. When COMEX kicks off, that's another story. So we'll see what we have at the time. All right, that's all for me today. No trades because I'm not seeing anything just yet. That makes, makes me think, yeah, that's a high probability trade. To me, it's all a little bit sketchy today. And this is why I'm going to sit, wait, observe, and then strike if I see something that's within the statistical probabilities of my own models. That's all for today. I will see you later. Maybe tomorrow. This was the Euro Trade on TopstepTV. I'm Marcus Tucker D, and I wish you a very good trading day. Take care.